All right, Bismillah. I guess I want to kind of do things a little bit differently tonight. Um, this is where we left off yesterday. I think we were on the 1 minute chart. Anyway, just kind of like want to discuss how to kind of plan for the trade, right? Anyway, in general, you have Alexander Elder. He mentioned in his book, New Trading for a Living, he has a concept called the triple screen trading system. Besides all the things that you need to know to trade effectively, you should have a system that you could rely on and not system hop, right? You want to know the system that you use day in, day out, so you can get to recognize it like you recognize yourself in the mirror, so to speak. When you see your A plus trade setup, you know, hey, it's time for action. It's time for me to enter. If you don't see it, then you should have an idea that, hey, this isn't for me. Let me wait for my trade setup. Just be patient, right? Regardless of how long you plan on staying in the trade or not, you should always only take the trades that you have some type of trust in. And again, always trade what you see, and and you should know three things prior to putting on any trade. That's literally your entry, your target, and your stop loss. Part of that goes into knowing your entry, your exit, and your stop loss, or your entry, your target or targets, and your stop loss. It's also realizing how much risk you're willing to put on per trade. So regardless if you have a small account, moderate size, decent size account, you should always keep in mind that, hey, right, if you risk your whole account for one trade and you don't have an area or an amount that you're willing to risk, then that's going to cause you frustration. That's going to make you really feel like giving up. Frustrated, everything else under the sun. So yeah, definitely you need to have a system you can rely on. So right here is what we can see here is some degree of a triple screen. If we use the 4 hour as a high time frame, then as Alexander Elder mentions, the intermediate. So this would be a high time frame. This 1 hour chart would be an intermediate term time frame, and this 15 minutes would be your lower time frame. Now you don't necessarily need three screens. You can kind of like put the levels from the 4 hour and the 1 hour onto the 15-minute chart. That could kind of represent your triple screen, meaning that you pretty much transpose pretty much what we've been doing. Like this right here is a 4 hour fair value gap transpose on the 15-minute time frame. So you don't necessarily need to have all four charts up, but it definitely could help some. It can help some people, and it could deter some people from making the right decision. Information overload is a thing. So if it's not your thing, then you shouldn't try to make someone else's strategy or system your own unless you back tested it, meaning that you tested it out and seen the effectiveness of it before you actually put on any amount of risk. That being said, let's get into it. So one thing that the high time frame does is let you know what is the overall market direction. So previously, again, if we are using the 4 hour like we have here on the chart, and again, this is a volume imbalance. We discussed that in the previous video. This is a bullish fair value gap, or buy side imbalance, sell side inefficiency. I really don't use BISI and SIBI. I know what they are. I just use fair value gap, bullish fair value gap, bearish fair value gap, inverted fair value gap. That's pretty much all I use. If you heard me speak, I definitely know the terminology, but that just, information overload with that one for me, right? You don't necessarily have to use all of the jargon. Kind of pay respects to who taught you, mentor, and do what's best for you. Sometimes it's not in the name, but definitely in the skill of knowing how to use that thing, right? So yeah, here we would highlight, additional highlight here would be to highlight this relative equal highs here. You can call that buy side liquidity. And prior to today, you would just say, hey, that's buy side liquidity, but you can actually say it's rated if you wanted to, because it's literally been traded through. So so this is already hindsight. Obviously, market is time now. You can see here is 7 p.m. New York time, January 23rd. So where are we? All right, so that's technically yesterday's high. These are dividers. All right, so midnight, indicating midnight. You probably can't see, but that's actually, this is the indicator I'm using. This is what I put it on. This doesn't mean that these are accurate for everyone, but this is what works for me. This is what works for me, and I'm partially doing 7 to 11, partially because I'm actually reviewing price action between 7 and 8:30 a.m. This ICT mentioned that this is an area for a silver bullet, right? Silver bullet between 7 a.m. and 8:30. So that's just my own studies, a little transparency there, but whatever. I didn't pull this up to show all of that, but this is a useful indicator for me, and it's just segments the days, midnight. It could also highlight the kill zones as I specified here, and it could kind of give you that type of visual effect on targets, on targeting, right? On targeting. So this right here would be the previous day's PM session. That would be the London session. This would be the Asia session. And you can see here, this is the London session. The London session ran the Asia session high, came down, ran the Asian session low, didn't break the New York PM session low, right? So around these lows, then you have this is technically a run on sell side here. Hopefully, yeah. So this is a run on sell side, like we mentioned. This ran the lows of the Asia session. You have a run up, and you have and this is also keeping in mind the higher time frame POIs, or points of interest. In this case, we have a higher time frame 4-hour fair value gap here. So this is a target, and you can see here it was a target all day long, right? Between the 15-minute inverted fair value gap. If you didn't like that inverted fair value gap, you could have used this bearish fair value gap that we discussed yesterday. And in this case, this will no longer be bearish. It was significant all day long until here. Bearish fair value gap. I'm just going to move it to highlight that area there. I'm not going to change the color because so this would have been bearish fair value gap into this 4-hour high time frame POI, or point of interest. And you can see here, it traded above the midpoint or consequent encroachment of that 4-hour POI. And it traded through this 15-minute fair value gap with force. And the reason why, partially, why we have a 4-hour and a 15-minute fair value gap is because on the 4-hour, as we see here, there's no 4-hour fair value gap up here. I mean, there's one created now on this 1400-hour candle, but tradable throughout the day. There's other stuff here which we're not going to get into necessarily. The point is, you can literally do everything you need to do with just fair value gaps. You don't need to get into order blocks. You don't need to get into breakers. Yes, I use volume imbalances, fair value gaps. I can use order blocks. I can use breakers. I can use mitigation blocks. I could use balanced price ranges, like this would be a balanced price range with this bullish fair value gap and then a bearish fair value gap. This is a balanced price range here. Don't really need to get into that in terms of, long as you know that this is here, that's there, right? Again, some of us are sometimes bogged down with the textbook studies where they can't translate that into street knowledge, right? So, all right. So back to this here. This was a bearish fair value gap all day until it broke through with force here. Now this here now is an inverted fair value gap. In any case, I'll stick to my original inverted fair value gap here. And this is it. Yep. All right. So you can see like price kind of like still respected that after it broke through. Right. So we have here you have a run on the London highs, previous day's PM session highs here. You have a pullback and below the London session lows and the AM session lows, and it pretty much filled up this fair value gap, the 4-hour fair value gap. Push higher, pull down into consequent encroachment of this 4-hour fair value gap. These are valid reasons to enter a trade. You can enter here. You probably don't see any fair value gap here, but if you drop down, you will, more than likely. But this is still trading imbalances. If you knew what price was targeting, and then what's the next target? This was the next target. This was the next target, and the previous day's high as the next target. Cause it went higher than that, but it's definitely some better guidance than no guidance, right? So if you see a setup, take it. If it's bullish or bearish setup, and you have conviction and trust in the system, then take that trade. Like Mike Belforet mentions, literally in the book, one good trade is one good trade. That's what you're looking for. You're looking one good trade after one good trade after one good trade. And each one good trade has its own parameters as well. Proper preparation, patience, hard work, as he calls it. Detailed trading plan for every trade, communicating with other traders, reviewing these trades. And that's actually why I started this here as a review of my system. It's not my system, I don't own it, but it's my system because I use it and I think it's profitable. Whatever, don't need to prove anything. If you see anything here that would benefit you, then take it. Show respect, give respect to the people that have aided you on reaching your goals. So actually, yeah, I wanted to make this 8:30 and midnight bigger than that, so it could be kind of seen. Oof, that's too big for me, but whatever. I'm from New York, so I gotta say pause, right? Pause. Pause, whatever. Anyway, so that's literally doing what this down here is doing. So I'm gonna just drop that down. So yeah, that's a different one. All right, so you can see, like, if you target previous days highs and lows, you can also target previous session highs and lows for whatever session you're working in, right? So if you are in the AM session, New York session, let's say 8:30 to 11, then you can see, hey, we ran the London high, we ran the PM session high, and we're not able to hold above in this situation, this 15-minute chart will be, because you don't have a fair value gap on the 4-hour, right? This is technically, it's like, don't say it, right? But whatever. This is technically your higher time frame POI on this time frame, because you don't have a fair value gap on the 4-hour. So you see that price is not able to hold, kind of ran above it, came back down, and you can see that it's not able to hold price above it. So this is a short situation. And I actually saw this happen. And again, like I said before, I originally learned the OTE setup. Then I got really confused trying to like learn everything, and it's like all the concepts, try to combine everything together to make my own type of system. And it's literally just follow for now. Just follow instructions. Right? I'm not gonna curse you out like ICT would do. Not saying that he's bad or wrong in his approach, but you know, just follow this. Just follow the system. It's there for a reason. But yeah, so optimal trade entry is here. Like I mentioned, you're looking for entries in the 78.6 and the 61.8, ideally 70.5 level. So yeah, here you go. So you have the run on buy side, like I mentioned, the London high, the PM session highs from yesterday. You see it not able to hold above a higher time frame, in this case a 15-minute fair value gap. You can enter here, and we drop down to 5-minute 4, 3, 2, 1. You probably, more than likely, you'll see a entry somewhere in here. But we can actually just stay on this 15-minute time frame. And you can see, here's your, even if you didn't see this entry, because this is the same candle, right? You say, that's the same candle, right? It didn't wick up and then wick down and come back. All right, so here's your entry right here, 61.8. Let's see, we can. All right, as usual, I like the eyeball stuff, right? You know. Anyway, 61.8 is your entry here, and there's your short. Yeah, this would be your first take profit. Do your first scaling out. Take profit 1, take profit 2. And we are already inside of this high time frame 4-hour fair value gap. So you probably will look to exit around these parts, or you were greedy, or not greedy if it was part of your trade strategy to say, hey, it's going to take out the previous day's low, then go for it. But you already know you're in a high time frame POI, and you can kind of see price rallying back up. It's on you. You're willing to stomach that type of pain. I know we all been there before. It's definitely a praying moment, right? Like my guy says, it's a character building moment, right? So yeah, right. So yeah, triple screen, kind of like taking all of this in. So you kind of go 4-hour, you got the 4-hour level. Probably still can't see. I mean, today was a better price action day than yesterday, and partially because of there was news today, right? There was news today. Tuesday. Yeah. See, it wasn't crazy, but it's a moderate folder. Tomorrow we have high impact news, 9:45. So see how that goes. So yeah, so we had some volatility this morning. At around 10 o'clock. And here's your 10 o'clock candle. Literally traded down. You can kind of see the top of the bottom of this fair value gap is the high of this candle. 48.74.25. Anyway, sometimes I don't like get distracted. You don't remember what number you just set. And here's the low of this candle. So literally it traded down, traded down to the bottom of this fair value gap, which was the same as Friday's high. So literally traded down to Friday's high, and then rallied up, take out this high. Take out this high, swing high first. Come on, right? Oh, that's whack. Come on. Anyway, rallied up to take out this swing high first, and then we can say after that, be looking for these relative equal highs up here. And that's how it went, right? So where are we? So we could erase this, right? Erase that. All right, so I think 1 hour is still looking like, yes, it traded down. Yes, you got a break in market structure here. And you just kind of wait. You could have waited all this price action out. Clearly it's holding above. Above is wicking down, taking liquidity from this fair value gap here. Again, this is a 4 hour, so it doesn't look as exquisite on the 1 hour. Stabbing through. If you wanted to do the 50%, you can do that. Yeah, I ran it all the way across. I used this high. That swing high. With this swing low. Probably say that's not a swing low, right? It's a down close candle. Anyway, here's your optimal trade entry. And watch. All right, didn't carry over. Hold on a second. Hold on. Okay. There you go. There's your adjustment. So sometimes you right? And where did I anchor it before? Okay. All the noise. All right, so essentially the same type of entry. Doesn't, without getting into anything other than OT entries and fair value gaps. I like what's all this like geometry on the screen, but anyway, it helps. If it helps, it helps. Doesn't matter. right, so all right, there you go. Anyway, the point was I wouldn't be looking to trade this on this time frame because it's not very clear. So yeah, I would drop down like I was saying yesterday, where things kind of look clearer. This is what you look for your setups on. So for me, it was this 15-minute time frame. It's still body to body, and just use this body here with this body here, and because you have a break in market structure here, and pull back. So this is like first entry, didn't do much. So you have another break in market structure here with this, came down around these lows. And this is anyway, don't want to get into that either, but this is a significant low. We weren't looking or anticipating this low to be broken. And here's your 70.5 optimal trade entry long. There you go. With that, let's take these colors off. So nothing additional from yesterday. There are levels. There's a fair value gap here. Here's your entry here. Here's your run on stops here. Your run up. And if you went down to a 5-minute chart, you can see it clearer. All right. Again, there's no fair value gap here. Kind of go your 3-2-1, 4-3-2-1. Still no gap here. And there's a gap, small gap here. That's if you're looking for a setup like that. All right, so here. Yeah, I don't do like I mentioned yesterday, I don't really go 4-3-2-1. I just go 5 and then 1. There you have it, right? You have your break here. The small pullbacks. No, you could use that, but there you go. I'm gonna just use these parallel lines because this is your right. This made it big and fat so you can't miss it. Okay. All right. They say, man, you had to do all that zooming in, right? But you didn't have to. You know, you go here to there, like we discussed yesterday. Look for price to trade below the 50%, which is right here. Look for a fair value gap or an imbalance here, below 50% of the range. And here you go. The precision is there. Is that volume imbalance from yesterday? significant to me. This is something else interfering here. Yeah, well, I use this study to kind of like, so this is 2 to 3 to help look for highlight the time zones for your ICT silver bullets. I don't necessarily trade silver bullets, but it's not deliberate. A trade market maker buy and sell models. Trade silver bullets. I don't necessarily look for silver bullets. I kind of had this here on the chart, so if you needed it, this can help you with your determining your bias. Right, high time frame is telling you bullish because this is the 9 EMA, 18 EMA. They are stacking. They are spreading wider. Just to let you know, we are still bullish here. This is just a Keltner channel. Don't need it. All right, letting you know we are above 2.25 ATR, so we are overextended. We don't need it. We already know we overextended, right? We already know that we are overextended. We are in, new territory, right? So just get rid of that. This was to help you guys determine or see the swing highs, fractal highs, 3 candle patterns, and on a lower time frame, you can still use. So you want to get in the direction. You only want to take trades in the direction of the high time frame. This is why we use the triple screen. 4 hour, 1 hour's intermediate. Again, you use this here. So clearly, this is not good, right? Get a quarter entry here. I don't use these indicators, so it's just more so if you're not sure, then go ahead, right? You're not sure, you think it's gonna, you don't want to trust your reading of price action, then yeah, look, this is a significant swing high or significant rally higher, I meant to say. Here's your optimal trade entry. Again, here's your 1 hour entry here. So more than likely, if you were using these indicators, you wouldn't get in here. You may get in on the cross, which is also coincides with this 15-minute fair value gap here. And that would be your entry right here. Let's take this. Your entry would be right on this low here. Right, and you can see the moving averages are spreading apart, so you could roll this right into the close. So yeah, so you have that. I put the VWAP here for those who prefer VWAP. So yeah, that's a possibility. Just below VWAP here, traded above VWAP, traded into VWAP. Let's take this off. Traded into VWAP here. Here you can kind of trust the trade, I guess, if you wanted to use these moving averages plus the VWAP or just the 9 EMA with the VWAP. That's another strategy. Once that crosses, then you can enter long. And this is market. This is the ES, so kind of closed during this hours. Right, that's why you have it like just kind of shoot up there like that. So yeah, you can use indicators if you can trust the indicator to get you where you need to be. On the 1 hour, on the 1 minute, this would be even more appetizing. So again, here's your pullback. You can already see the willingness of price to go higher. This probably make you a little shaky. Here's your fair value gap. So you can use it in conjunction with what you already know. Or it can literally be a hindrance to you. So some of us should just stick to one thing again. So I'm not necessarily teaching you how to jump systems, but I'm showing you how to build the faith to actually trust your system. So you have these indicators just to begin to trust in yourself and trust in your system. Then I don't see anything wrong with that. Likewise, if you just trade in price action and you kind of see like prices failing, like ICT would say, if it violates 3 PD arrays, then exit the trade. But if you only trade in 15-minute fair value gaps, then it's easier said than done, right? So yeah. So yeah, I'm not sure if I covered a lot or a little, or if it was clear or not. I hope so. It's definitely a lot of trades today. And again, there were shorts, there were longs. Again, just using 2 PD arrays, same PD arrays from yesterday. Really 3, because you got this volume imbalance, right? And but yeah, these were the main ones: the 15-minute inverted fair value gap, or the bearish one until it became inverted here, and this 4-hour fair value gap. So yeah, on this time frame, if you missed this entry, you could have caught this one. And technically, you wanted to stick to the rules, you would enter during the kill zone. So you probably would have let that go and entered here during the kill zone. So yeah. So we look for high probability trade setups. We don't just look for trade setups. We want the ones that will potentially yield us the best results. I kind of swole up the 8th. I wanted to end this video right now, but whatever, right? So midnight candle prior to the 8:30 opening, midnight opening price. If we are bullish, we want to enter in a discount. So the midnight open lets us know if we are bullish and price is below the midnight open, then we want to get in as close to the midnight open as possible, because that's where the discount is. And you can see it here, for example, midnight open here, price trades down, runs the Asian lows. Right here, you have this here, and you have you have this fair value gap right here. I'm just gonna turn that black because it's a little quicker. So here's your entry. Again, you targeting same session highs, the London session high, and then you target PM session highs from yesterday. And you know, if it held above, then that's when you would have target that, but it didn't. So right. So that worked here. That's your first entry long for the day. So that covers the midnight opening. So if you were bearish, then you want to get in above. So if you wanted to catch this short here, you could have, but I wouldn't recommend it on this time frame because it didn't really do anything, right? We're already at this higher time frame POI, this 4-hour fair value gap, and it doesn't really show any willingness. As you can see, all this time, it doesn't show any willingness to really go beneath it. So taking this short down here is, without a catalyst, is kind of risky. It's very risky, right? Lower probability again. So yeah, all of this. So again, after 8:30, then the same rule applies, similar to the midnight open. 8:30. So if you are 8:30 hits and you are bearish, then you want to get in as close to 8:30, above 8:30 as much as possible. So you can see that this type of entry here, or this type of entry, let's go down to a 5-minute to see. All right, so you want to get in as close as possible to 8:30. So you could have took this here, and on the 5-minute you have my good friend Mr. Inverted fair value gap. It was bullish, price traded below it, traded back into it. This is your entry, short, right? So my A+ setups are these inverted fair value gaps, OTE setups. Not all the time where you kind of see, you'll see one or the other, right? Or both, right? But it's whatever you have trust and reliance on. So I kind of focus on 3 different setups. And that's that. All right, so here's your short here. Trading into high time frame POI, or point of interest again. Again, now you are long, right? You're looking to get long, so now probably saying, hey, this 8:30 doesn't matter. You can still use the midnight. I do, right? That's why I have it running. Even the previous days, I still have it going all the way to the close. Something to study, something to look at, something to show interest. So back down here, and you can kind of see if you are like a support and resistance guy, you can kind of still see that midnight opening is still relevant later on in the day. So I'm not just saying it because I want to feel like I'm right or like I'm reaching. You can still see price is still respecting that midnight open, and later on you can kind of still see prices respecting that 8:30 opening. Opening price, that is. And I think that's it, man. But yeah. سبحانك اللهم وبحمدك أشهد أن لا إله إلا أنت أستغفرك وأتوب إليك. And this would be your entry here, and that's pretty significant. Again, you could get out. Look at this, coincides. 2 standard deviations coincides with the intraday high. So that's a clear target. Pull back into that 15-minute fair value gap. Honestly, I was dialed in earlier on the 1 minute, actually. And I thought that this was stop short. I think I've seen this. I'm not sure. It looks very different on the 1 minute, right? Obviously. Yeah, I saw this happen. And it was I saw this bullish fair value gap, traded below it. And then I was thinking like, it's done. But what happens is when you so dialed in, you don't see the bigger picture, right? If you stuck to the 15-minute, or you left the triple screen, the 15-minute, or these high time frame charts on the screen, then you'll see that, hey, it's not really doing anything. Don't panic, right? If that was your goal for this swing high to be taken out and then this high to be taken out, then you want to have trust in your system. Not blind faith, but trust in your system, right? We already mentioned the different scenarios where price took out the Asian low, came back up, took out the Asian high, then took out the London high, took out the PM session, New York session high from yesterday, came back down, took out the London lows, didn't take out the PM session lows from yesterday. So what's the next target? AM session highs. Holds above this fair value gap. What's the next target? And you can see that here. Pull back. And then you can see, boom, that's the next target. All right. So, it's just me talking. Just me talking, buddy. Anyway. Let's see. All right. Yeah. Yeah. I don't want to leave the chart though. So, but anyway, subhanaka Allahumma bihamdika ashhadu an la ilaha illa anta astaghfiruka wa atubu ilayk.